Welcome to the Business Debate. I'm Nadira Tudor, and today we're talking about the technology of finance. Technology can often be disruptive, and nowhere is this more evident than in the finance sector. As more and more of us embrace the digital world, the financial sector has had to transform the way it does business. The rapid pace of change in the sector is having an effect on all, from the traditional incumbents such as banks to the host of new players who are entering this market in increasing numbers. In this new environment, firms will have to ensure that their internal risk controls are up to the task, as well as ensuring that they fully comply with any new regulatory measures that may have come into force. London Stock Exchange listed Gresham Computing plc is a leading software and services company that specialises in providing real-time financial transaction control and enterprise data integrity solutions. With over 30 years' experience and headquartered in the City of London, their customers include some of the world's largest financial institutions, all of whom are served locally from offices located in Europe, North America and the Asia-Pacific region. To explore what companies need to do to ensure that they're across all of these areas, we're joined in the studio by CEO Ian Manocha and by Chief Technical Officer Neil Vernon. Neil, Ian, thank you for joining us at the London Stock Exchange studios.
Thank you.
New technologies are completely transforming the finance sector. Can you explain to me what these changes are bringing?
Nadira, you're right. There's enormous change going on in banking and finance more generally. The pace of change has accelerated. I think banks and financial institutions are really trying to do two things. They're trying to work out how to run their organisation more efficiently and more effectively with increasing complexities and volumes of data. And secondly, they're trying to work out how to transform their organisations to frankly be more relevant in today's world and to provide improved and new products and services to customers that can enable them to compete.
Neil, with all these changes, control and compliance must be crucial. What are companies having to do to take this into account?
What they're having to do is actually change their controls and compliance to being a settlement date activity 10 days after the trade is done, to being a real-time activity. The moment a trade is done, they need to show compliance, they need to show integrity.
Are there specific technologies that can help them with this?
So we're moving to a real-time world and we need real-time technologies. We need in-memory computing, grid computing, technologies that can act in a super fast time to give the analytics that the organisations need.
Ian, can you give me some examples of this in practice?
Certainly. I think there's probably two sides to that. If I share with you how banks are providing new services to their customers, and then maybe we come to Neil to talk about how they're using these technologies internally. So in terms of services to customers, corporate banking is a great example. A corporate bank has a better view of the transactions of their customers clearly than the customer themselves. So how can they use those transactions, provide additional control, additional transparency, and improve services to their corporates? And clearly that makes the relationship more sticky. On the internal side, maybe Neil, you can pick up on that.
There is a real need to show control internally. And if we look at the recent frauds, actually, those frauds were committed because internal trades in innovative new financial products, did not have the necessary controls to provide certainty, to provide integrity. And the fraudsters took advantage of that. The fraudsters knew that there weren't controls and they were able to commit those multi-billion-dollar frauds because of the lack of control.
Ian, how do you see these changes playing out over the medium to long term?
Well, the pace of change isn't slowing down, Nadira. So if banks are to be competitive and offer their customers great services, they do need to get on top of these technology innovations. Otherwise, margins will deteriorate and customers ultimately will drift away. But it is more fundamental at times. Evidencing being in control is now expected by the regulators. And frankly, if that evidence isn't there at all stages of the process, then they will lose their banking licence. So this is a fundamental.
Ian, Neil, thank you very much for joining me in the studio.
Thank you.